Hi, guys. Welcome to the How I Raised It podcast, the show where you get an inside, unfiltered look at how real entrepreneurs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Michael Bamberger of Tetra Insights, a platform that helps companies turn user research into actionable insights. In this episode, we talk about running a fundraising process, creating urgency. We go through a specific cold email that worked for Michael. We talk about the Boulder, Colorado startup scene, and much more. If you're tuning into this podcast to learn how to raise capital for your business, I've created a super valuable free welcome package for you. It includes a list of 2,500 investors who don't require a warm intro, plus 200 questions that investors are going to ask you. So it's really going to help you prepare to raise capital. To get instant access to this, click the link in the first comment. While you're there, please leave us a nice comment, what you like about this show or this series in general. We really appreciate that. Last but not least, if you enjoy this conversation and think someone else would too, please share it with them and hit that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy the chat with Michael.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by FounderSuite.com. Today I have Michael Bamberger of Tetra Insights coming to us from Boulder, Colorado. How's your day going?
Doing well so far, Nathan. Thank you for having me.
Is it Boulder's funny because you can have like a big snowfall in like May and then it'll be 90 degrees the next day. What do you got right now?
Right now, it is like 70 degrees outside and quite lovely. Last week, we had a day that started off, it hit a high of 83, and then we got 3 inches of snow later that day. So pretty typical. Yeah, it was like a big late May snowstorm. It was the first time I've had that experience. I think we got like 6 or 8 inches just last week. Just crazy.
Where did you, I'm assuming you didn't grow up there or from, where did you move from?
Yeah, I grew up in South Florida. So my parents are immigrants. They moved here from South Africa in 1985. I was born in Florida in 1986. Lived there my whole childhood until I went to college up in New England, and then spent about a decade in New York City, and then moved out here to Boulder 2.5 years ago.
What led you to Boulder?
So I had started 2 companies in New York, and was young and single for all of that experience. Then I got married in 2017, and I left my last company. And as my new wife and I were thinking about the next stage of our life, which was starting a family and me starting a new business, we put together criteria of kind of what we want the next 10 or so years to look like. And New York City did not have a lot of those things, like a comfortable home and super high quality of life. So we found Boulder to be a perfect place that has a community for technology businesses and venture capital investment and tech talent here, which was important for me, obviously starting a technology company. And on the family life side of things, obviously it's very beautiful here, very kind and nice people, and easy access to amazing outdoors. So we put together that criteria. Boulder checked all the boxes. We came out here to check it out, said, let's do it. And we've been very happy here now for over 2 years.
Good stuff. I grew up in Boulder, so I'm from
Oh, really?
Boulder. It's interesting because I left there for college and haven't come back or haven't moved back. I've been back many times, but it's interesting to see how Boulder's become this like pretty hip, hot, trendy place. It was always a really cool place, but mostly for like college students to go to CU from the Midwest and party for 4 years and ski for 4 years. Now it's become like this hip place for startups. It's pretty interesting to watch it develop like that.
Yeah, it's interesting for me because there's so many people that we've met. I've got 2 young kids, so we meet a lot of parents through daycare. So many people have moved out here in just the last couple of years from San Francisco, from New York, for exactly the same reasons we did. So it's becoming a popular ground for, I guess, your 30s and 40s in your technology career. When you have a family, this is a pretty decent place to be, it seems.
And I haven't looked into this, but housing prices are pretty much like, I feel like they're almost on par with San Francisco Bay Area or close to it, right? I mean, it's really expensive housing wise, right?
It's not as bad as living in San Francisco, New York, or DC, but compared to living in like Durango in Colorado, it's much more expensive. So it's all relative. Yeah. You know what? we're in a rental house now that costs less than it's a 5-bedroom house in a lovely neighborhood. It costs less than my 1-bedroom apartment in Manhattan did 5 years ago. So to give you any indication, it's
Right.
not as bad as it could be, that's for sure. But yeah, it's not ideal. There's limited housing here. So I think for purchasing, it inflates prices. And there's been a lot of demand because so many people have moved here in the last couple of years.
Well, and for better and maybe for worse, depending on your perspective, Boulder, even back when I was there in the 80s and 90s, they purchased a lot of open space land and they keep it open, right? So there's a limited area to develop, unlike somewhere like Austin, which just keeps sprawling, right? Like Boulder's very kind of constrained in where you can build housing, and that's good if you live there. That's bad if you want
Want to
affordable
move
housing,
there.
right?
Yeah, not great for affordable housing, that's for sure. But overall quality of life, I'm very happy to be here.
And we'll get to what you guys do in just a moment, but since we're already talking about it, I know Techstars is there. What are some of the other sort of startup hubs or epicenters or big names in Boulder? What's going on there?
So the biggest VC firm here is Foundry Group.
Sure.
Who obviously they invest across the spectrum in deals from, I think, seed all the way to super late stage. So I'd say they are in addition to Techstars, they're the biggest VC element in town. There's a lot of small funds and firms around here on the VC side. So we have a lead investor, Access Venture Partners, who is here in the Boulder area. We spoke to a bunch of other investors that are right here, also in Colorado. So I'd say there's like Foundry Group is the really big one. And then there's a lot of smaller VCs that are active at all stages, it seems like. So I'd say those are the Techstars and Foundry Group, though. That's really, I'd say they're the biggest centers of the startup community here.
You think is there 20 venture funds in Boulder, 50? What's your gut rough estimate?
I think if you include the Boulder and Denver area, it's probably 40 to 50. I would guess. I'd say probably half and half Denver, Boulder would be my guess. There's also like funds in Aspen and Vail, and a lot of these venture capitalists, I think, are living their dream life up in the mountains in nice resort towns, and flying into the smaller airports on their luxury aircrafts to look at deals around town. So there's a lot of that also. Yeah.
Very cool. All right. Well, let's talk about what you do. What is Tetra Insights?
Yeah, we build software for user experience teams to turn their user research into shareable insights. So we work almost exclusively with large enterprise companies who run their end-to-end user research and insight practices through our platform. So they'll source research participants, conduct interviews, analyze and tag those conversations, and synthesize them into insights and findings. And ostensibly what our software is doing is allowing companies to use this qualitative data from their user insight practice as effectively as they're using their quantitative data to make decisions.
Got it. So given a really simple use case, pick your favorite enterprise or, Acme Inc. What are they doing with this?
Yeah, so I'll give an example of an actual customer of ours. LexisNexis is a legal technology company. They have dozens of researchers who are testing their products with active users and prospective users. So they're coming up with new products, new digital interfaces, new ways of interacting with their data, and they'll put those ideas in front of their existing users to get feedback, iterate those prototypes, and then launch real products that they're then testing with their actual user base as well. So they have dozens of researchers that use our platform for conducting the research, tagging and analyzing the data. Then they have dozens more stakeholders who are coming into the platform to review the results of that research. So which prototype did people like and why? What do we know about these users when they're trying to solve this problem? They'll do all of that work on our platform to answer those questions, and then they'll use the platform to basically create those findings and share them with the org.
Trying to probably oversimplify a bit, but is your piece of that whole equation more on the data collection and gathering, surveying and such, or the analysis of all that into, usable output?
It's both of it. It's both of those. So the technology started on the analysis and synthesis side of things. So our initial MVP product allowed users to upload videos, tag those moments from those videos, and then share, let's say, the 10 clips they tagged as confusion from those videos. That's how the software started. You upload existing videos and then do the analysis. As we've evolved the platform from that first MVP version about 3 years ago, now you can actually, we have like a Zoom integration and we have a participant sourcing module. So now you can source participants, schedule them for moderated interviews, launch those interviews through Zoom with our Zoom integration, take notes in real time, time stamped with your Zoom recording, and then it gets uploaded automatically and then processed. So we started off more on that analysis and synthesis side of things, and we've grown to really capture the end-to-end research workflow process.
Cool. And what's the quick backstory, genesis story? Where did this idea come from?
Yeah, I'll try and do the very short version of this, because talking about fundraising, this is the story, right? This is the key element of my story, is where the idea came from and why I care about this, why I'm spending time on it. The very short version is I've been helping companies my whole career make decisions, get aligned and make decisions based on data. So I worked at a private equity firm doing that work across their portfolio. Then I started a consulting company helping brands directly with collecting data, analyzing it to make product decisions. And from my consulting company, I co-founded a few startups, one of which really took off and did well. It's a business called Feedback Loop that actually just finished its final acquisition, and is now, I'm no longer involved with it at all anymore. But that business, Feedback Loop, we were selling to enterprise companies, basically the lean methodology at scale. Startups can build, iterate, and learn very efficiently and effectively. That's why they're going to disrupt your business, because you don't know how to do that. And they can. So we sold to them, we're going to help you run the lean product validation, basically methodology at scale for enterprise. So we'd work with large brands, helping them to test product concepts, to validate their innovation pipeline. In that business, we were doing a whole bunch of data work. And what I found very quickly was working with these large brands, when we were able to share with them video clips and audio clips from real interactions with their real customers or target users and customers, that was the data that cut through the noise. They were able to collaborate, make decisions based on that, get aligned very effectively, and actually move forward in what they were trying to do. So my career, having been in getting teams aligned and making decisions, I felt like I'd found the holy grail. Right now, when I'm able to deliver qualitative data in addition to, and oftentimes instead of, quantitative data, I'm getting real impact with the teams I'm working with. So that was one of the epiphanies I had at my last company. I won't go into the full story because you asked for the abridged version, but I basically started Tetra to solve the problems that I discovered at my last business, which was, when companies can easily get insights from qualitative data, they're much more effective at making decisions. But the technology to do that seamlessly and easily didn't exist. So for our team to stitch together video clips across themes could take days of work. With our technology now, it happens in real time as you're doing your interviews. So we took basically trying to take that workflow of qualitative data, especially audio and video, into actionable, analyzed, insightful information. The technology really is there to fill that gap specifically and empower the practitioners who do this work inside corporations. And that was not like 7 years ago, not a lot of companies had like user researchers. Now, pretty much every company has user researchers and user experience teams that focus on insight work. So empowering those people has been a big part of the vision as well. It's one of the things I saw at my last company.
Yeah, cool. Neat. That's good. Okay, let's talk about raising capital for this. So how much have you guys raised and over how many rounds?
We've raised $7 million to date. We did a seed round back in 2020, just as the pandemic was getting started. So 2 years ago exactly, actually. And then we raised a Series A that closed in September of last year. So it was a $1.5 million seed round, a $5 million Series A, and I'd raised $500,000 of friends and family prior to that back in 2019.
Cool. Let's I guess start. If there's anything notable to talk about the friends and family, let's do that. But otherwise, let's maybe go on the seed round. How did you put that together? Are you just looking for big data angels or what? Talk about.
Yeah. Well, I can provide some stuff on friends and family if it's
Sure,
you think it would be helpful.
It's always useful, actually.
All right. So for friends and family, this is my third business I started. So I came in with really clear ideas and a know-how of what it takes to get a company from zero to something. So I decided that before I was going to get any outside capital, I wanted to make sure that I had validated this idea substantially. So I actually put in my own money to get this business started, to hire our initial engineer, to make sure that when I went to friends and family to raise capital, I had a version of a product. I had users. I had insight into the opportunity that I could really share. I didn't want to take friends and family capital speculating on an opportunity. I want to take friends and family capital saying, I am onto something here. Would you like to participate in it? So that made that much easier because I wasn't necessarily having to just tell friends and family, I'm starting something. Do you want to be involved at the ground floor? I'm saying, I've started something. Here's what I've done. I could kind of explain the story to them in a more tangible sense. And that, that's just time. That friends and family is just time. The biggest lesson I learned there is do it as a rolling open round, take checks as you can get them, and, kind of have a target around which money you want to raise and just keep it going. So I'd say my friends and family was probably over like 6 or 9 months. I was probably raising money all together during that period.
Was that a convertible note or safe, or what'd you do it on?
Did a convertible note. Yep.
Okay.
Yeah.
Yeah, I like that actually. That's the validating, and then kind of the change in I guess verb tense. I don't know if that's right. I've started versus I'm starting. That's actually kind of a big deal, I think.
And obviously I had the wherewithal to do that. Not everyone's in that position. I think this is where like a technical founder has a big advantage, right? I'm a web developer, but not an engineer. So for me to build the software I needed, I couldn't do it myself. If I could have done it myself, I could have saved that money, right? But I needed to hire someone to build the type of software that we needed. So I think it's like and I knew I could solve that problem with money, right? So like I was able to choose what I invested in, both in terms of my time and my capital. So I think that's, when I talk to friends of mine, it's like their problem is actually focus. It's like if you're fundraising, fundraise, right? If you're trying to sign clients, try to sign clients. Trying to do everything at once is an inefficient use of your time and energy, and you're going to find yourself not making progress anywhere. So I have capital and time. I'm going to go and build a product and try and get first users. Then it's like, okay, now I'm going to use my time to go and get more capital so I can do more things. So that's one of the things that's been helpful for me in figuring out what to do, is like really prioritizing and trying to have one thing on my list as opposed to even two. That's been a huge lesson for me, especially when at this super early stage where you can't do nearly as much as you think or hope you could.
Totally. Yeah, that's I talk to founders all the time about how to raise capital. We give webinars on this and stuff, and people are like, well, how am I supposed to do this? I'm running the business. I'm like, I know it's that impossible equation that founders somehow have to solve. It's just the way it is. There's no answer to that.
It's not, and this is tangential, but, so much, I think a lot of people kind of cast aspersions at fundraising as it's a distraction from the business. And it's like, this is something I wish I didn't have to do. And I certainly feel that when I'm going through it, but it does help you to know what it means to actually focus and drive a process to completion. Right? Because it's that life or death. It's your feet are on the fire. And I think that urgency that founders often feel during fundraising is actually the urgency you should feel always in the other areas of your business that you're focusing on to get improvement. So for me, like I embraced it as, this is going to suck, right? Like, I know I'm not going to enjoy this. There might be parts of it I enjoy, but I got to go in here. Like, this is a test of grit. This is a test of perseverance. This is a test of focus and just, going through the 1,000,000-mile march, right? One step at a time, and just getting kind of that fortitude to do it. So in that way, it's like fundraising really does prepare you for the rest of being a CEO and founder in some very critical ways that are actually really helpful that you don't realize until later on.
Yeah, I think that's good. If you don't mind me asking, on the building the MVP and kind of getting it to I have started versus I am starting, if you don't mind sharing, what did that cost you? What did you have to put in to get to a sort of friends and family fundable state?
I think all in, I put in about $30,000 to $50,000 before I took in outside investors at all. I put in more money after that, but that was kind of the initial, because all I was paying for was an engineer, right? Like just one person it came in as the first hire with a substantial equity stake, who came in for a much lower salary than they otherwise would have. So that's like, basically it took us to get to an MVP, 4 to 6 months of their time. So that's basically their salary was really the only cost that I had up until that point.
That makes sense. That's reasonable. I think we spent something like that also at Founder Suite, like $50K of my money to get that first version out, which we then threw away and rebuilt. Okay, cool. Now, seed round, was this people that knew you you worked in private equity? Was it people from that, or did you go source strangers, angels that were doing data research, etc.?
Yeah, so I'll say the seed round for Tetra and the things that I was going through, I'd say was the most harrowing time I've ever had in business. So basically, in January of 2020, I knew I was onto something with my business. We had paying customers, we had users who were growing their engagement, really positive feedback, all this great stuff. Like, okay, I'm really onto something. There's a lot of opportunity here. So in January, I went out to the Bay Area just to start meeting with initial investors, getting a sense of the market, based on our traction, what should we raise? Who should we talk to? I met with my friends out there who are investors and their, other founders, just got a lot of advice and just kind of put my feet on the ground. And I left there being like, okay, we have an amazing opportunity. Like it looks like we could maybe even do a much bigger round than I thought because of how valuations, everything are going on. And the story I'm telling is interesting to people right there. Even before, like I'm saying, I'm raising money, like just the initial exploration, like they were leaning in. So I'm like, okay, this is great. And I had time, right? Nothing was urgent. So I'm like, let me just start doing this process slowly, just like getting intros through friends, people who I have connections to. And those conversations were happening, January, February. Then March 2020.
I know where the story is going, but keep going.
Oh, are you familiar with the pandemic? Oh, okay. So I don't have to explain the context here.
Keep going.
Yeah. So basically, in March of 2020, I thought I was completely screwed. I'm like, oh my God, like the bottom has fallen out of the entire universe, and my company, my software, we are research, right? The value, what you invest in our type of solution pays off over time, not immediately. It's insights that fuel decision-making, that fuel iterative changes that you're not going to see the impact for some period of time. R&D is a line item on a P&L, right? And it's literally you subtract it from when you get to your bottom line, right? It's like, it's just an investment that pays off over time. So I'm like, we're going to take a red marker right through that line item and we're done. So in March, I freaked out. I started doing experiments to see, is there a way to position our technology differently? I actually launched I unlocked like my individual contributor superpowers from, when I was earlier in my career, and just literally launched an entire brand in a weekend to test a whole new concept with our technology. It was like, okay, I realized everyone's going to be working remotely. Our technology deals with like Zoom recordings. So like I did an experiment, like what if we use our technology to help people collaborate remotely? Just built a website, built some blog posts, ran some ads, generated some leads, and like was trying to validate something. So in the month of March, like I stopped thinking about fundraising, and I'm like, I got to just kind of existentially make sure that we're going to not cease to exist as the whole world changes. So we don't have that much capital. Like I will need to raise money at some point. So during that process, I realized, after like a couple of weeks of doing that, I was just completely wrong. We were getting more inbound leads, more interest, and people were investing more in our area. I'm like, oh my God, thank goodness. Like this is great news. But I basically had to like change my mindset like immediately to be like, all right, this is working. Don't freak out, go and raise money with this idea. And I had been having these conversations through like connections that weren't really going anywhere. They were progressing for a month, right? Well, I wasn't urgent on it. And then I kind of put pause on it. And then when I went to re-engage, it's like, listen, we're investing in people we know, who we can meet in person, the deals that we already had. And I'm like, I understand that. I'm like, and they didn't say those words, but that's what I was gleaning, right? Like things are not as serious and they don't know what the hell to do. They don't know how to validate and vet people over Zoom. Yeah. So I decided, okay, instead of going through these relationships, which were very slow moving, I decided, let me try an entirely different tactic. So this must have been April, like just beginning of April of 2020. And I decided what I'm going to do is everyone told me the way you raise capital is through relationships, right? It's who you know, getting the right introduction. And then I'm like, this is not working for me. What I'm finding are people who are taking a meeting because of the relationship, and they might be interested in what I'm saying, but they don't actually give a shit about this space and this opportunity, right? They care about the relationship that's there. So I'm like, this isn't working for me. It's not working fast enough for me. So I said, let me go and do some research and find investors that seem like a perfect fit for us. So what does that mean? They're focused on B2B SaaS. They invest outside of the coasts. They have experience with businesses at our stage. They have portfolio companies that maybe already are dealing with video technology or some elements of what we're doing, user experience technology. And I went, I got a Crunchbase Pro subscription. I did all this research, and I was using Founder Suite at the time. As a matter of fact, I did research through your tool as well, built a long list of investors that seemed like a good fit, and then just said, I'm just going to start reaching out to 5 of these a day. So I sent a cold email to 5 funds one day, and it was like 3 p.m. that day. 2 hours later, I had an email back from one of the investors saying, I'm interested, let's schedule a call. 2 weeks later, they were my lead investor with a term sheet. So as soon as I changed my criteria to finding people who were a fit, and I made an outbound message that's like, hey, I see that you're interested in this. This is what we're doing. If this seems like a fit, I'd love to chat. And the process was really quick from there when I had identified the person. It's just crazy. My first batch of cold outbound emails, once I kicked it off, is where I got my lead investor from. And, I think a lot of it is luck. But I think it was just the approach I took, where I am not here to use relationships to close a deal. I'm going to use the merit of what we're doing and the concept and my passion about the idea as what I'm going to basically try to transact on. And that worked immediately. So I've told other people about that, and they do the cold outbound, and they don't get great success necessarily. So I think it really depends on how good you are at crafting an outbound message, like first of all, and also how good you are at doing research on people to know what will they care about. Right? My subject line was like B2B SaaS. This is our current MRR. Right? Because when I read the guy's blog post, it's like, we invest in B2B SaaS. And if you have initial MRR and a product with happy users, that's usually a good fit. Like, all right, I know what I'm talking about in this email. So that's how that all came together. So I went from in March being terrified, not knowing if we were going to exist, and just having relationship conversations that weren't going anywhere, to now proactively sourcing people, going 100% committed to our vision, not waffling on it at all. And that's when I got the good outcome on the seed round.
That's good. I like that. I mean, I think I usually tell founders cold email is not going to work very well for you, or it's not very effective. But with the asterisk that if you really put in the time and research investors and really find the ones that invest in big data at seed stage outside the coast with monthly revenue of this, then it actually can work. But a lot of people skip that step of putting in the time on the research, which it sounds like you did. So I was going to say, what was the hook in your email? You kind of partly alluded to that already. You had a subject line that was, B2B SaaS plus your revenue. What else? Any other just hooks in that email you think were really effective?
You know what? Let me pull up the email right now. Because I don't remember exactly, but it definitely, I've done a lot of cold email in my career. So I've learned a lot about what works and doesn't work. In my last business, I built that business on cold email, basically. So that was, my co-founder came to me with this idea, and it's like, okay, what are we going to do? The first thing we do was validate it. So it's like, how are we going to validate it? We're going to validate it by sourcing leads and blasting out emails to find the people who are the best fit. So I had experience with cold email, and so my subject line was call pre-seed round ?
If you don't mind just maybe reading the email, if it's not too long.
Yeah, well, I'm going to just cut out the revenue numbers just for confidentiality's sake. So the subject line is call pre-seed round ? And then in parentheses, B2B SaaS, qualitative data analysis, and then our MRR. It says, hi, first and foremost, I hope you and your family are safe, healthy, and as comfortable as possible during these crazy times. They were very crazy times. Said, I'm the co-founder of Tetra Insights, a B2B SaaS startup based in Boulder. I'm reaching out to see if you're available for a 30-minute call to learn about our company. We're raising a round of financing, and I want to introduce myself to see if we might be a good mutual fit. Our software transforms audio and video into business intelligence. We launched in January and generated X number of revenue while in beta. Our MRR is currently Y from companies including LexisNexis, Yara, and Segment, where our technology powers their customer insights practices. We have a great team. Our customers love our product. We validate our enterprise use cases. We're raising this round to accelerate our product development and go-to-market efforts. Below are links to our one-pager and deck if you'd like some background info. Please let me know if Tetra sounds like a good fit and if you're free for a call. That was the email.
Yeah, that's nice. You have some hooks in there. You name drop some good reference customers, the MRR, which was it impressive? You don't have to give the number, of course, but was it an impressive number, or was it just a sort of proof point number? You know what I'm saying?
It was. I mean, it was 5 figures, so
Okay.
it was a meaningful number. It wasn't, not negligible. So I mean, then that definitely helped for sure in the process that we came in with like some good sized contracts.
Cool.
Obviously, you have to explain all of that revenue after, during the fundraise, and it's not always as beautiful as when investors sees it. Like, oh, this is perfect. Like, no, we're an early stage company. We've got like a few different contracts. Right? We've got a few different things that we're working on. So there's more to it, but it's like definitely that it's about capturing interest and then having a conversation. That's how I think about it.
Very good.
That worked.
Who was the lead investor on that round?
That was Active Capital. They're based in San Antonio and Austin.
Okay, cool. All right, let's jump ahead to the Series A. Did you repeat the same process, or what changed?
No, this process was different. So one of the things that happened after our seed round and the progress we made was we got a lot of inbound interest. Not as much as we get now, but back then, seeing the deal go through, you end up in a bunch of databases, investors start tracking you and following you. So we had way more inbound interest. So basically for my Series A, I had a list of funds that I'd had conversations with, since the seed round had closed, some of them even before the seed round had closed. So I had a list of people who were already aware of Tetra, which was definitely helpful. And then for this process, I went back to, I basically said, okay, we decided to raise capital just over a year ago. It was like March, April of last year. We went to market with our seed round. Things were working. We had real indications of progress. So we said, let's go and raise more capital. So we started off I went back to investors that I had spoken to before. I also asked for intros through my friends where we were definitely a good fit. So now that we're talking to bigger funds and we had more of an established track record, it was easier to have those conversations. They weren't just based on relationship. The relationship was now just opening the door for a compelling story, right? And I think that was a big difference from the seed round. Like, we have real customers, we have real revenue, right? We have real insight on how go-to-market works. We now have a year or more of data with existing accounts. So it's an easier position to then have intros and conversations. And this process actually went pretty quickly because the people who had inbound interest, they're already warmer than an intro, right? So the fund that ends up leading our round, they knocked on my door, right? And they just knocked on the door around the time that we were starting the fundraising process. I'm like, hey, good timing. Like, we're actually thinking about raising money now. But through intros that I got, we had other funds that were interested. So like, having a bunch of funds interested pretty early on in the first 2 months of the process made it a lot easier to feel like I was running the process, if that makes sense. Because I think, the advice that I had gotten was set timelines, set deadlines, run the process. It's very hard when you only have one interested party and you actually are not willing to walk away, right? Once you're in a position where there's a lot of interest, now I actually felt like I could run a process based on some timeline that I wanted and drive people to feel urgency. So I went through the process with there's one fund that came in super strong, right? We went all the way, before I even talked to other funds seriously, they were basically all the way deep into their diligence. And they decided not to give a term sheet because they did more Series B, Series C. We only have 2 quarters of progress. They're like, we just need to see more progress, because they wanted to write a bigger check. So I'm like, that happened without even talking to other investors. One process went really deep. And once I saw that process go so deep with the first fund I talked to, I'm like, okay, I feel very confident about what we can do. So then it was just a matter of running a tight process, bringing people all in through the process at the same time, managing it like a sales process with a pipeline. I gave deadlines and expectations. I said, we want to sign a term sheet by June. That's our goal. We have a bunch of funds that are interested right now. I tell them where they are. I'd say some people are a little ahead of you, some people are a little behind you. Giving that information helped to accelerate things for sure. And we ended up at the point where I set the deadline, right? And I committed to it. So I had, there's a lot of funds that were interested, but I basically had it down to two funds to lead the round. One leaned in, made a term sheet offer, was aggressive, was trying to get the deal closed. The other one was a bigger fund where I had to do another full team presentation. And so that was at the deadline day. Like, yeah, we're going to write a term sheet. We just need you to talk to a couple more partners. And I said, guys, I'm sorry. Like, I gave the deadline, and I went with the other fund, right? So I stuck to it, I guess, is the thing, right? And being able to run a process. Yeah, it does. But I also loved the fund that gave me the offer. Thinking through the criteria of what mattered to me, having learned a lot from my previous fundraise, they were my preferred investor. So I also had to choose what I'm optimizing for. Am I optimizing for just valuation? Or am I optimizing for investors who I want to work with, who are going to be a good fit and are going to be helpful? And I chose that because this is my first time as founder and CEO, right? I founded a consulting company that I ran, but that's not CEO work. It's like managing partner work. Yeah. I was a co-founder at my last business where I ran all of go-to-market and customer success. I wasn't the CEO. So this is my first time as CEO. And I want investors who will help me to get better. And so when I found this was a smaller fund where the investors are deeply active inside their portfolio companies, as opposed to these other funds I was talking to that are much bigger, right? Much more complex. I'm like, I want someone who's actually going to give a damn about me. And like, I matter in their portfolio. And they're not just going to discard me when they have another deal that's the hot, sexy one. Like I didn't want to have a VC investor that like they're just going where things are shiny. And that's where they're spending their time. I want investors spending time with me. So when I had the criteria and I was confident about it, it made it easy to make a decision because I was driving the process. I had put together my mindset of what I was looking for, and it made it so much easier to make a decision. And the other thing I've learned is that confidence is so critical in this process. Right. And I think this is one of the mistakes I made at the beginning of my seed raise when I was just having those casual conversations with people. I was being like deferential and like obsequious. And I'm so thankful to have your time. Right. Like investors don't want that. They don't want someone who's thankful for their time. They want to be thankful for the CEO's time. Right. And once I realized that was actually feedback I got from a friend of mine who had just raised like a big round. He's like, you have to go in there because like as a good CEO, I think you have to see all the things that are flaws in your business because you have to address them, you have to fix them. But when you go and talk to investors, you have to not think about those things. You have to really tell the story of optimism and confidence and lean into that. It's like you have to be unreasonably confident because ultimately what investors are looking for is they're investing in you as the CEO and founder to be the guy who's going to get the job done and knows better than they do, right? What it's going to take to accomplish it. So coming in being deferential, it did not work for me and it does not work. So I think like just having things that build your confidence makes it so much easier to actually get a deal done because they can, people can sense that. They can sense legitimate optimism and confidence versus a veneer or whatever. And certainly when you come in being like overly grateful to investors, that's weak, right? That's, like
interesting.
That's just,
sure.
Yeah.
Yeah, no, that's interesting. I haven't thought of that so much because I think it's hard to get investors' attention. I think founders are often very grateful when they do get someone's attention, someone to give them some airtime. And so kind of getting that out of your brain and being deferential is good. That's really useful. And that was Access Venture Partners as the lead?
Yep.
Or what?
They led and they brought in Next Frontier Capital, who wrote an equal check. And our investors, Active Capital, put an equal check to their seed round investment into this round. Cool. So it was 3 funds, completed the round.
That's great. So I won't keep you too much longer. This is all really interesting, but any just general advice you'd give founders or advice you would give yourself if you were doing this all over again? Anything we haven't covered that you'd like to share?
I think the best advice I can give, I've probably covered a lot of it, but just kind of summarizing, running fundraising as a process is critical, right? You have to treat it the same way you treat a sales process. You got to run people through a funnel. You have to be really clear about the materials that you develop at every stage. You have to create urgency. You have to be proactive. That is, I think, critical. And I think truly focusing on your fundraise when you're fundraising, really above everything else, is what's going to make it successful because it is so time consuming and your schedule has to be open and flexible for getting onto investors' calendars. And someone's like, hey, I want to chat. Like when you're getting deep in the process, they're like, I want to chat. We chatted this morning. Can we chat again later today? Like they're moving fast. So you have to be available to move fast. So run a process. The second thing is the story is what sells. And this is one of those things where it's so interesting because once you get investors, the story doesn't matter. It's all about the metrics, right? It's all about the numbers and the performance. Before the investment, the numbers are just part of the story. So I think you really have to understand how you're telling the story and using your numbers to tell the story. So for me, how do I think about story? It was about validation gates. What did I do? Year one, I funded this thing myself to prove that we could build a product that users would get value from and keep using. Check. The next validation gate was, will people give us money for this product? Right? That was the thing we were trying to figure out. Check. The third thing for us, we decided we're selling to enterprise. We're focused on enterprise solution sets. Can we satisfy an enterprise where they're going to sign a contract with us, an annual contract with us, and we'll actually deliver value, where they're giving us positive feedback and ideally renewing and expanding, right? So we check that box. So then when I told the story for the Series A, it's like we checked all these boxes. The last thing for us is building our scalable go-to market, right? We know we can sign deals, we know we can close them, we know we can onboard them successfully and they'll get a ton of value. Now we need to invest in our go-to market to really learn how we're going to build that scalable mousetrap for acquiring customers that have a higher lifetime value than their acquisition cost. So I used our numbers to tell that story. And I think being in control of, like, where are you in the business? Like, what is next? What do you have to do next? That's what worked for me excellently. Because now I think that's largely what gave investors confidence, is like, okay, I'm telling a story that makes a lot of sense. And I'm giving them a very clear sense of why their money is needed now and where it's going to go. And what I've done with previous money that had been invested in the business that was successful, right? That's a story of, this is what we were trying to do. We accomplished it. So that, I think, telling a really good, cogent story, trying to use your traction as part of the story, as opposed to traction sitting on its own, right? If you have 500 clients and $50 million of annual recurring revenue and you're a seed stage company, that could probably be your only slide and you're going to raise a lot of money, right? But for most businesses, unless you're crushing it on the traction, you have to include your data as part of a broader narrative that is compelling. So that is, honestly, I don't think that can be overstated, the storytelling nature of it. Also, what I didn't realize is that story has to involve your personal history as the CEO and founder, right? It has to be about you. The business has to be an expression of what you're passionate about and how your experience is relevant, that was easy for me because I've been working in this space for a decade. For other founders, like some of my friends they've been opportunistic founders. They don't actually give a damn about the space they're in. They just found an opportunity. That's a much less compelling story for an investor than something continuous. The other one there, I mentioned this before, it's the confidence, right? You have to, no matter, and you're going to be stressed and you're going to lose your confidence, you're going to waver during this process. But when it's showtime with an investor, you have to do whatever it takes to be Steve Jobs on stage, basically, right? Like, you have to be that good. You have to be that confident. That's a high bar probably for presentation, but like, that was the advice I actually got from my friend. He's like, Steve Jobs has this reality distortion field that makes people hate him, but also made him like the most charismatic, influential person in history. He's like, you have to channel that during these investor pitches, right? Like that. And I'm like, okay. Cause I always saw like, I'm like an anti Steve Jobs. Like, I will never be abusive to people. Like, I don't care about a lot of the stuff that he cared about in terms of management and leadership, but that reality distortion, you have to do it in these investor pitches. So the confidence. The other thing, I'm sorry, I just got to go through this list real quick. Yeah, go for it. The last thing that really matters is your team, right? You have to have an investable team. So going by yourself into pitches, which I did, is not ideal, right? That is not ideal. Fortunately, in my last fundraising round, I had my chief product officer now. He's like a co-founder that could present for me. That made the Series A much easier when I had someone else that they saw themselves investing in. So I think like really focusing on an investable team is probably more important than investing in you as the CEO. So I say that's the lesson I would give myself, like, be much smarter about hiring from day one. Hiring is the most critical thing, and it takes a long time to figure that out because you feel like product is so important, but really it's people that's most important. And then, the market, the traction, the projections, that's all part of your story, part of the narrative. But leaning into the story, the confidence in the team, I think that's how deals get done.
I like it. Really good. That's a great list. Good checklist. We should turn that into a checklist and throw that into Founder Suites documents. Yeah. If people want to learn more, it's tetrainsights.com. Anything you want to promote or plug, or just have people check it out and,
Well, yeah. I appreciate the plug, but what I'll say is, if you are a company, a startup or a later stage company, it doesn't matter, that cares about user experience, you're curious about how do we get user insight to make sure that we're making the right decisions, I'm always available for conversations like that. So feel free to go to our website, reach out to us. But happy to have conversations. I'm extremely passionate about using human-centered data to make really great decisions. So if that's something that's interesting to people, I'd love to chat with them about it.
Very cool. All right, Michael, that's a treasure trove of good insights there. Thank you very much. Good luck. Maybe I'll see you next time I'm passing through Boulder. And have a great Memorial Day weekend.
Thank you, Nathan, to you as well. I appreciate it.
Over now. Thank you.
Bye.